You're welcome to another edition of Islamic Finance Daily Update, and Happy New Week to all our viewers. In this edition, we bring you updates and development in the economic and financial markets of the Organization of Islamic Countries (OIC) member states. We begin with the news from Kuwait-based Camco Invest that the top and bottom lines of Islamic banks within the Gulf Cooperation Council region are likely to be less affected by the impact of COVID-19 compared to conventional lenders in the region. Given that the conventional banks in the GCC have experienced higher growth rates at over 10% in assets and deposits in 2019 compared to Islamic banks in the GCC, which saw assets and deposits grow at around 8% in 2019. Camco Invest expects the pandemic to impact the conventional banks to a greater extent in the near term. According to the International Monetary Fund, Indonesia's 2020 gross domestic product is expected to decline by 0.3% year-over-year, as indicated in the June 2020 update of the IMF World Economic Outlook. The IMF noted that in countries like Indonesia, with high shares of informal employment, movement restrictions imposed to contain the spread of COVID-19 led to sudden income losses and unemployment for workers. Data from Indonesia Ministry of Manpower reveals that 3.6 million Indonesians had been either laid off or furloughed as of the 27th of May 2020. Qatar's government agencies have expressed their commitment to supporting the United States of America-based investment in the Middle East and making Qatar a fintech hub for the region, according to Fahad Al-Dozari, commercial attaché for the Embassy of Qatar in the U.S. Speaking at a recent virtual panel discussion covering Qatar's evolving fintech sector and related business opportunities, Al-Dozari stated that Qatar was one of the world's most stable economies and offered robust incentives for US-based companies, including 20-year tax holidays for free zone operating companies. Malaysia's economy is expected to contract 3.1% year-over-year in 2020 due to the economic slowdown caused by the COVID-19 pandemic, according to the latest edition of the World Bank Malaysia Economic Monitor report released on the 25th of June 2020. However, the World Bank projects the country to rebound in 2021 with 6.9% year-on-year growth as the outbreak eases. The Central Bank of the Philippines has identified insufficient Sharia academics or Islamic finance professionals and lack of tax neutrality as key issues in implementing Islamic banking in the Philippines. According to the BSP, the main obstacle is the poor knowledge and capacity on Islamic banking and finance for regulators, industry participants, as well as other stakeholders. In order to overcome this, the BSP has initiated measures such as introducing frequently asked questions in Islamic banking. The International Monetary Fund has predicted the gross domestic product of Saudi Arabia for year 2020 will contract by 6.8%, driven by the economic impact of the COVID-19 pandemic as well as reducing oil prices. This is a reflection of a rapid deterioration of Saudi Arabia's economy, as the IMF latest prediction is 4.5% lower than its earlier projection made 2 months earlier. Sultan Aitan bin Tariq Al Said of Oman has issued a royal order announcing an emergency interest-free financing program to support businesses that have been most impacted by the COVID-19 pandemic. According to a statement issued online by the Government Communication Center, the business categories included under the special scheme will comprise of entrepreneurs, especially holders of the Riyadh card, small and medium-scale enterprises, those who are self-employed, as well as beneficiaries of the Oman Development Bank loans. The government of Maldives has announced that it will be issuing $300 million worth sukuk in the international market. According to the president of Maldives, Ibrahim Mohamed Solih, the planned sukuk issuance will replace the previously planned sale of Samoria securities worth $300 million through Japan Bank for International Cooperation. Speaking at a press conference held at the President's office, Solih stated that the negative impact on the economy will be easily manageable if the government is able to raise $300 million through the issuance of securities. The Islamic Development Bank over the weekend listed the ISDB Sustainability Sukuk worth $1.5 billion on the Dubai Nasdaq. This innovative Sukuk links global investors with social projects in ISDB member countries that tackle the aftermath of COVID-19 with the hopes of boosting social interventions in member countries. The current global economic uncertainty fueled by the crude oil price shock and unprecedented COVID-19 pandemic makes a strong case for developed and emerging economies to turn to non-interest financing instruments. Understanding the fact that it is driven by the principles of ethical financing, nations like Nigeria, with a population of over 180 million people, would need to drive enabling legislation for Islamic finance to thrive. This will require the insurance, pension, capital market, and financial market regulators, as well as the cooperation of the Sharia advisory bodies and the Ministry of Finance, need to collaborate to deepen the non-interest finance space in the country to achieve economic prosperity for all Nigerians. And that will be all for today. To learn more about Islamic finance, visit our website www.proshareng.com. Also, you can engage us on our social media handles displaying on the screen. Till we come your way again, thank you for watching. Have a nice day and stay safe.